Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through our live rates, and then we're going to talk about USDA loans. Give us just a moment here to go live on all the different platforms. Definitely appreciate everybody tuning in. Go ahead and drop a comment there in the chat, and we will get started here shortly. All right, it looks like we're live on all the platforms, so we'll go ahead and get it started. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat and drop any questions you have in the chat as well. All right, so welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates, and then we do a deep dive into a different loan type. Today's loan type is going to be USDA loans, so doing a little bit of back to the basics here for today. But before we do that, we'll check out the live rates. So Nick, if you're ready, let's see what the rates are looking like this morning.
All right, so we will pull up all of our different standard programs here for today, July 3rd, just after 11 a.m. Eastern. So all of our standard programs have new rates. Thankfully, we had some bad news, which is good news for rates, and we see some downward movement this morning. So we will compare our different programs and compare the APRs. If you'd like a full breakdown of the itemized fees that go into the APR, please get with our team members. We have over 300 loan officers to help you out. For our demos today, we'll set up the same scenario to compare across. We'll set up a standard single family home. We will set $500,000 purchase price, $400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. We'll set an estimated 760 credit score and an estimated 40% debt to income ratio here for all of these scenarios. So let me go ahead and share my screen. And we'll check out the pricing for today. So the first option here at the top left, typically the most common option that most people think about when they think about a loan, a 30-year fixed conventional loan for a primary home. So today rates come in at 6.624, final APR 6.927. Thankfully, we're under 7 again there. On the APR, we were over there for the last couple days. So again, some downward momentum is definitely welcome. And hopefully we see the pricing update more today as well. Now, if for any reason our customer doesn't qualify for a conventional option, typically the next option we want to present is an FHA option. FHA allows more leniency on credit issues, as well as a much higher debt to income ratio we can go to. However, it does require yearly and upfront mortgage insurance. So the rates for FHA come in at 5.875 today, final APR 6.853 with all of the fees included. So if you compare them side by side, a customer that qualifies for both may want to check out FHA if they're willing to do the mortgage insurance. And our customers that need to use the FHA, definitely a great option as it is comparable, or in this case, slightly cheaper than conventional in some cases. And our next option is our VA options for our eligible vets and active service members. Definitely a great option if you are eligible. Rates as low as 6%. Final APR 6.312 today. And again, we hopefully see this go down later this evening. Notice VA is definitely better than FHA and conventional at any given time typically. So any of our eligible vets or active service members definitely should take advantage. And next on the list for our standard agency government programs is our USDA program. Those are only for USDA eligible areas, typically the rural areas of the country. So for our borrowers and properties that are eligible, these are great options. Rates as low as 5.875, final APR 6.641 with all of the fees included. So notice our customer would typically be comparing FHA to a USDA example probably. So USDA is definitely a great option as it beats FHA in this example, as well as conventional if our borrower and property qualify. And Jose will go into more detailed analysis on USDA today. Now, those round out our standard agency government options that any other bank or lender will have. And if our customers don't qualify, many other banks or lenders have to deny them. But that's where we love to start presenting our 5,000 other products, starting with our 30-year fixed non-QM alt doc for a primary home. So if a borrower doesn't qualify for a conventional or FHA or any of these options here and needs to use different documentation, we have that here. Typically, this would be bank statement or similar. So rates today for a bank statement or similar program, 6.99, final APR 7.309. Notice we're well within a half a point of conventional to use alternative docs. So absolutely amazing for our borrowers that need to use it. Very comparable there. Now moving on to investment properties, tons of flexibility in programs with investment properties. So first up is our 30-year fixed non-QM alt doc for an investment. So again, this would be a bank statement or similar. Rates come in today, 7.375, final APR 7.705. And we'll compare that to our other investment property options. First up, there are no government options, so no FHA, VA, or USDA, but we do have our conventional option. So 30-year fixed conventional for an investment property comes in today at 7.25, final APR 7.611. That's just a touch cheaper than our alt doc, but we definitely recommend all our investors check out our favorite products, our DSCR loans. DSCR stands for debt service coverage ratio, no employment, no income needed. Simply use the estimated rents from the appraisal to determine a DSCR ratio. If the estimated rents can cover the expenses, aka the property cash flows, that's a ratio of 1 or more, which is preferred. For all these options, we put a ratio of 1.5 so we could see all of the programs here. So our 3-year prepayment penalty option is the most standard option. Rates come in at 7.124, final APR 7.444. Notice that beats conventional and alt doc as well in this scenario. So definitely a great option for our investors out there. Most investors prefer a DSCR loan, even if it's more expensive. And in this case, we're beating conventional. Absolutely amazing. And we can even sweeten the deal with a 5-year prepayment penalty for our investors that are willing to get the rates even lower. 6.75 rate, final APR 7.085, which beats conventional substantially. And the final DSCR quick option we present here is our no prepayment penalty option. Some states don't allow a prepayment penalty, and some investors don't want one. No problem, we have that option. 7.625 rate, final APR comes in at 7.986. So still pretty comparable, just a touch higher. So again, many investors prefer DSCR to conventional, much less documentation, and all this great stuff that comes with it. And our final 2 options you see here are our second mortgage options. So these are non-QM products that are definitely made for this new market where we have tons of borrowers that have a very good rate on their first mortgage, but still need some cash out. So to get cash out of a primary home with a 30-year fixed second mortgage, not a HELOC, not a variable rate, 30-year fixed loan, rates as low as 8.125, final APR 8.278. And remember, these are non-QM programs, so not only can we do them as regular loans, full doc, but we can also do alt docs like bank statements. And same option here for our investors that may have a low first mortgage and want to keep that and still need cash out, no problem. 30-year fixed second mortgage for investment properties to get cash out. Rates as low as 9.875 today. Final APR comes in at 10.2. And again, this is non-QM, so it could be full doc or even alt doc with bank statements. So tons of great options here. Let's pull back up our topic for today, which is going to be USDA loans. So as usual, our deep dive topic is something we can't always do on the live pricer. When we're comparing scenarios side by side, we're using the same LTV, same property types, all these things are the same, so we can compare. But Jose is going to go into some deep dive examples on actual scenarios where we would use USDA loans and some of the tips and tricks for that. So Jose, let's check out some live examples here.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. USDA loans are our go-to option when we have a rural type property. USDA loans have to qualify for certain areas that are USDA approved in order to be able to originate the loan. So the first step to do would be to always go to the USDA geocoder, plug in the property address that you want to pre-approve the borrower for, and make sure that it is in a USDA approved area. So amazing option with reduced mortgage insurance, reduced credit score requirements, and definitely flexibility in underwriting, especially for our rural area properties. And the USA program is mainly meant to aid workers in those rural area properties to obtain housing. So let me share my options with you today for all of the great USDA products that we have. Our first option here is for a 100% LTV, the standard purchase for a USDA property. Now, one thing I'm also going to make note of USDA, it is for 1-unit properties only. 2 to 4 unit properties are not accepted by USDA. And if it is a condo, make sure it's either FHA approved or Fannie Mae approved, or that it abides to Fannie Mae guidelines through a condo questionnaire, and also no litigation. So lowest cost option here is 6.375 at par, and you can buy that down to 5.75% for our standard 1-unit 100% LTV USDA purchase. And now our manufactured home USDA purchase, little bit higher interest rate on this one. You're looking at 6.75 is our lowest cost option with a little bit of a lender credit, and you can buy that down to 6.125 at a cost of 2.25 points. And our low FICO score USDA purchase at 100% LTV down to a 550 credit score. 8.25 is our lowest cost option, almost at par. And you can buy that down all the way to 6.75% at 100% LTV for our minimum 550 credit score borrower. And now some interesting twists here on USDA options. Our USDA renovation loan purchase for a 1-unit property only. 6.75 is our lowest cost option at par, and you can buy that down to 6.125%. And the renovation loan for USDA, similar to the FHA 203K renovation loan, you do have a streamlined option, and then you have a regular option. And it does allow you to purchase a property either that you borrower wants to turn into their dream home by renovating kitchen, bath, maybe new windows and roof, right? A property that would normally you can close on, just the borrower wants to include the renovation funds in the purchase so they don't have to rack up their credit cards, for example. Or the renovation loan could also be used to purchase a property with condition-related issues that would prevent it from closing under a regular USDA loan, but would be able to close under a renovation loan. Different code compliance issues, which would normally not allow the property to close. It could have, for example, missing kitchen cabinets, vandalism, missing bathrooms, different things that could cause it not to be able to close. And now our one-time close construction to permanent loan, also at 100% LTV. This is the amazing product that allows you to purchase the land and build the home with the same loan. The construction loan transitions to the end loan once the construction phase is completed. And I will let you know, this product is also possible when there is a construction loan for the purchase of a manufactured home. Remember, a manufactured home is not a mobile home. Manufactured home sits on the land that is owned. And in this case, the borrower would buy the manufactured home from the manufacturer. The manufacturer would then ship the manufactured home to the site, and then the manufactured home would be assembled. The assembly part on site is the construction portion of the loan, as the manufactured home is shipped in 2 pieces usually. Then those 2 pieces are put together, and the electrical and the plumbing and the AC and all that other work is done. It's permanently affixed to the land. An affidavit of a fixture is then issued, making it official that that mobile home has now transitioned to be a manufactured home with a folio number and real property attached to it. Now, this is possible for 1-unit properties only. Again, 7.75 is our lowest cost option with a little bit of a lender credit, and you can buy that down to 6.25% at a cost of 2 points for a one-time close manufactured home loan for USDA. And USDA does not allow for cash out refinances. Remember, this is a loan that the objective is home ownership for people that live in rural areas, as well as being able to uh, remain in the home should you need to refinance into a lower interest rate to make the home more affordable. So that is what the rate and term is for. And here, 6.375 is at par. That 6.25 snuck in there. It's not correct. 5.99 would be the next rate, and 5.75 lowest rate option. So 6.375 is your lowest cost option at par. 5.75 lowest rate option at a cost of 2.5 points. This is for a rate and term refi. And now our last option under USDA is our rate and term streamline refinance. To be able to do this, you have to be refinancing from an existing USDA loan. The streamline portion means that you're not going to have to pay for an appraisal. There's going to be limited income and credit requirements as long as you are current on your home loan. And you're looking at 6.375 at par, with your lowest rate option being 5.75% for your USDA rate and term streamline refinance for always only one unit properties at 100% LTV.
All right. Thank you, Jose. Okay, I don't see any questions here, so I think we can go ahead and wrap it up. Remember, we do this at 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different topic. Now, tomorrow is the 4th of July, so we will not be doing a show tomorrow, but we will see you back here on Friday at 11 a.m. Eastern for the next episode.